YouTube. Look at this crowd. Mike, you see the crowd that's here? Are you able to see that?
A lot of people. A lot
it's
of
big,
action.
right?
A lot of
BR
action.
is here. Steve Leon, Casey, Dave Schmarter, Mark Aguilar. Look at this. Roger Weatherford is back. We love that guy. John Tagnacci, Josh Brannon, and so many other women. What's up, everybody? Welcome to the hottest show about investing, trading, finance, whatever on YouTube. If you guys are here and you know people that aren't, tell them what's going on. We're getting bigger. We're about to go to 80,000 subs. We love all our subs. Thank you guys so much for joining. And we're using your ideas for the show. You're a big part of the show. Make sure if you want to give us a topic to cover, you email askthecompoundshow@gmail.com. And this week, as an added bonus, if you ask one of the questions that makes it on the show, Duncan's going to get in touch, and you're going to get one of these bad boys. This is the official Ritholtz Wealth summer shirt. It's not even in the idon'tshop.com store. So this is special edition. I only have like 10 of them. Sorry, they're promised to other people. But if you ask a good question and we use it on the show, it's yours. We'll figure it out. We'll get it to you. All right, we're going to go to Y Charts very quickly. Shout out best sponsor on earth. We love you, Y Charts. You guys are going to see a ton of charts tonight. We make them on Y Charts just because we love it, and we always have. And you'll frequently see when we're writing posts data from Y Charts too. So, all right, let's get into the first thing we want to talk about tonight. Inflation is overhyped. I know this is going to upset a lot of people because inflation is personal for some reason, or everyone has a version of it that bothers them. So I get it if you want to throw tomatoes.
Wait, hold on.
But I'm going to stand on that.
No, I don't think you do get it. What do you mean for some reason? It's personal. It's personal for some reason. Everybody has their own inflation gauge. Of course it's personal.
Family, what if I told you people don't appreciate all the ways people don't appreciate all the ways in which inflation actually benefits them? They don't count that part. They only don't like they don't mind when they get a raise. They don't mind when their business is able to sell something for a higher ASP. They just don't like it when they have to pay for something. But like the economy adjusts. Here's what I mean by inflation is overhyped. I know there's inflation. Like, I'm not stupid. I didn't fall out of a tree this morning. The degree to which inflation is going to hurt the economy or the market, that's the part that I'm saying is overhyped. Mike, what are your thoughts?
I actually think that the inflation fears have come down dramatically. Just like anecdotally, just you don't see as much hysteria about inflation in the past few weeks.
It's almost as if the shit is transitory. Like, it's almost like that, right? Like kind of, hasn't everyone been saying, or half the people been saying it's transitory, and here it is transitorying.
I think I think most people were in that camp. I'm in that camp, but I think it's too early to like spike the football.
Yo, a lot of people who are not in that camp have always been saying inflation.
Correct.
That's the other thing.
Correct.
So if you've been saying inflation for 10 years, you're not right because prices went up.
Prices
for a long time, prices did. Yeah, but for a long time, we were dragging along at 1%. So are you claiming victory over all of that period of time, or just the last 3 months?
A lot of this is semantics, and the transitory word sucks because what's transitory or temporary is the rate at which inflation has been increasing.
Not the prices.
Prices are not going back down.
That's right. I'm with you. Nobody understands that. It's like talking to a wall.
Few.
You see. Very few people. You say to people, it's transitory. They go, no, it's not. This is now the cost of doing business. Yes, but it's not going to go up 5% a month. That part is the transitory part.
You know why I think it's calmed down? Because everybody understands now that it's being driven by bottlenecks, by supply shortages that are coming back online, by the way. So, for example, in June, used trucks and cars were up 10% month over month. That was responsible for a third of the increase. That is not going to continue. Now, what could make this continue?
Housing too. April, May, June. What went on with home prices and rents have a huge impact in the calculations, and it was ridiculous. That's not going to continue at that pace either.
Let's throw up a chart of gas. Gasoline's getting expensive. Cost me $60 to fill up my tank the other day for the first time in a long time. That kind of sucks. Wages are not coming back.
Can you put that back, John? Chart on.
Josh, how much does it cost you to fill up your truck?
Mike,
90?
we're not even at the gasoline price levels of 2013.
Right.
Like, I get it. It's relative to what you paid 2 months ago.
Correct.
I'm with you. But it's
I don't think
we pull this chart back further, it oscillates.
Of course it does. I don't
$2,
think people
$3.50, $2, $3.50.
I don't think people experience inflation year over year. I think it's month over month.
I totally agree. It just becomes apparent to you. You have like a holy shit moment where you're like, wait, how much does that cost?
All right, so let's talk about like what the market is pricing in. So let's throw up a chart of the 10-year. So this was going hot. It's since rolled over bigly. Like obviously we all see this. Let's look at break evens. So what this is showing is the spread between what you can get on a nominal, just a plain vanilla treasury bond versus inflation adjusted versus real rates. So the difference between those two is 2.5%. And this is a rough approximation for what the market is expecting inflation to be over the next 5 years. And it is almost never right, but this is what the market is expecting.
I kind of feel like that's the important part because it's a moving target. How could it be right? Like everyone's opinions are always changing. So that's like a trader's look at the current guess for inflation.
Right.
And then it's extremely volatile, maybe more volatile than actual inflation. Yeah.
It moves.
I think that's fair. What's next? What else do we have? Charts.
We've got Japan and Germany if you want to go there.
Let's do that.
So we look like junk bonds in terms of the spread, like relative to Germany and Japan. We look like high yield.
So I really think that this is like a very key point that continues to be lost on people, or they're letting it be lost on them on purpose. But look, in the end, you have a situation where large pools of money are in search of yield, and they're coming from overseas. We have a global economic system, and you have pension funds in Europe. You have insurance companies in Japan. When they're buying assets all over the world, they're looking for the highest yields, and that renders the ability of the 10-year to look like it's predictive of the economy completely impotent. It can't do it. That's not what it's for. And I think people lose the thread on that.
One thing that I'm going to disagree with you on is you made the point that if prices rise and incomes rise, isn't that a push? It's not.
I'm asking you what you think about that.
It's not. And I wish I could find this quote of people were pissed off in the late 70s. They got a 14% raise, but inflation was up 11%. Even if you're outpacing inflation with your wages, it does not feel good.
Isn't the big worry that wage inflation will halt or even reverse? And then the price of goods and services keeps rising?
How does that happen?
What happens is there are 9.2 million open jobs, and there are a lot of people who have just sat the year out because of unemployment benefits that are very generous and just being in a situation where their kids didn't have to be anywhere. Then September rolls around. All of a sudden, you have a lot of people that are ready to go back to work, and maybe that makes it so that we can get a little bit of a halt in the rising cost to pay people.
Okay, so that could happen.
Peel people off the sidelines.
Yeah, I could see that. But why would goods and services keep rising if that was the case?
Capacity constraints, the same reason as right now.
I think that's going to get
changed. It's not getting better overnight.
Well, it's not, but I think it's sorting itself out. We'll see. Let's move on. You good? Anything else?
I'm pretty good there. I think though, do we have consensus that like inflation, the current rate of inflation and source of inflation, its ability to fuck the economy up is vastly been overstated? Or do you not agree with me?
I do agree with that, and I think the market agrees with that.
I'm starting to feel that way too. So, okay, let's keep going.
On the Compound and Friends, we were talking about the creation of ETFs. They're only going one way. It's easier. People are getting more creative, more niche. There is a new ETF coming on the market, ARKK. It's anti-ARKK. It's basically a way to get short by getting long. And this, to me, feels pretty icky. Let's look at a chart of ARKK's AUM. And to basically try and profit off of somebody else's fortune. I don't know. It just feels icky. I don't like this.
Do we know this kid, Matt Tuttle? Have we ever run into this guy?
I don't know him. So I don't like this idea. Not into it.
yo, this feels personal to me. And then in this Bloomberg article, I don't like it, by the way. I understand what they're trying to capture is this idea of like unprofitable tech stocks and an easy way for retail to bet against that. But this feels like a very personal way of going about it for the benefit of marketing. Like SARK is the ticker. They're going to charge. They're going to charge 75 basis points. So in the Bloomberg article, he said he's a fan of hers. No, you're not.
Come on.
You definitely. I'm not saying you're jealous of her. A lot of people are, though. You're not a fan of her because if you want to bet against her investment portfolio, then what aspect of hers are you a fan of? Her fashion sense?
He just wants to give people the option. Listen, even if ARK falls apart, I don't think this is going to pick up assets.
I don't either, because also, is it leveraged?
I don't think so.
Well, they're going out of their way to make the case that this is only going to work in reverse on a daily basis, which leads me to think there's going to be some leverage used in here. Did you read what they said? Like, they make it very clear, don't expect the inverse of ARK on anything more than a daily basis, which leads me to think this kid might have set up the perfect pairs trade. Why wouldn't you short the leveraged short ARK fund and go long ARK? Aren't you? If there's leverage in SARK, and you're betting against one and against the betting on one, betting against the other, like, don't you just automatically make money that degrades?
There's no automatically making money.
Kind of feel like there is. I don't know.
No. All right.
I got to look more at this. I'm not a fan of this. I don't like the idea of trashing somebody to market your own product. I'm not saying that that's his intention. It just feels like that's how this is coming off, and I hope it doesn't work. So anyway, that's my take. Is me? All right.
It's you.
Michael, do you feel like the market is exhibiting signs of defensiveness?
Not really. Make the case.
Well, economic data is getting muddled. Like, you look at the City Surprise Index, like, it's getting harder to see the same level of upside surprises as we were seeing as recently as a couple of months ago. Biden's popularity just fell off a cliff in July versus June.
Malarkey.
No, seriously. 49% of people told the Harris poll that they think the country is headed in the wrong direction, up from 42% the month before. It's one of the biggest jumps in a 1-month time frame ever. I think that obviously has a lot to do with remasking stuff in the news and Delta. It's not 100% his fault, but I think that's starting to show up in the stock market, and I wanted to point this out and see what your take was.
Okay, go.
Bank of America says, although the S&P 500 gained 2.5% in July total return, it was a 6th straight month of gains, up 18% year to date. However, investors are showing a clear preference for higher cap size and higher quality. So Russell has been lagging. Russell 2000, Russell mid cap, everything's been lagging in the large caps. And then they're saying the highest ROE stocks are outperforming the lowest ROE, and the return on equity, that's a measure of quality. And then obviously large is doing better than small, like in every sector. People are showing a preference for, I guess, what we would now call the new defensive type of stock, which is big and high quality.
Let me jump in. So consumer staples, utilities, and REITs all performing very strongly, which would be a feather in the cap of the market as being defensive. But then to negate all of that, the equal weight S&P is at an all-time high. So
yeah, how is that possible? Well, maybe it's because of all those sectors that you just named looking
nonsense.
good.
Malarkey. I don't buy this for a second. I mean, what else are we looking at to show that the stock market is defensive right now?
Well, so we talked about that easy comp narrative going away.
That I buy.
Now,
but
now you have Fed members giving speeches that are in direct opposition to each other, which I don't care about that per se, but I know a lot of people do. And when there's that level of uncertainty where one Fed head is like, we're not even talking about tapering, and the next one's like October, which is what happened this week, it injects a little bit more uncertainty.
You could also point to a few other things to support the defensive rally. For example, there's an ETF from Direction called Moon. It's like Moonshot, so it's like the most speculative shit, the craziest companies. This thing is getting I mean, wrecked. It's in like a.
Yeah,
I don't know.
why couldn't this guy launch like an S Moon and short this? Like, why did it have to be her? That's the,
So if you look, I mean, there's just a lot of companies that were high flying that are looking like crap now. Open Door, for example, Zillow. A lot of the SPACs look like junk. How do IPOs look? IPO doesn't look great. So I mean, you can make the case that the market is getting defensive. The SPAC ETF looks awful.
One thing I would say is if we're gonna have the real correction, like if it's gonna come seasonally, it should come right now.
Seasonally, get out of here.
I'm just saying, I'm totally fine with that. Why wouldn't it happen now?
Market's at an all-time high. Fine, please correct. Please correct. Enough already.
Yeah. All right. That's where I'm at. I think from here it gets messier. It gets harder. Way harder than the first 6 months of the year. I could end up wrong. I don't think I will be.
I think you're right about that. Comps will get harder. Okay, this is positive. Balchunas tweeted showing this chart about payment for order flow. Fascinating data showing a significant 25% drop in revenue in payment for order flow. Robinhood, if you look all the way on the left, is down 34%. This is quarter over quarter. Looks like the YOLO retail trader got vaccinated and is getting outside more. Balchunas tweeted that. I love that.
People are trading. People are doing less trades. Is that what?
Well, payment. How could payment?
Help me understand what's on there.
Payment for order flow is down 35%. Robinhood's payment for order flow.
Where does this data come from? They have the whole industry's payment for order flow as a data feed somewhere.
This is public information.
It is, huh?
Yeah.
All right.
This is reported. But wait, hold on, Josh. Let me give you more data. Just to set the stage. Let's look at the revenue by product, because this is important. So if you look at June, what you'll notice is the options trading has exploded. So non-S&P 500 stocks has come down. S&P is tiny because that's so boring. So even though it's down 30%, the payment for order flow, people are still trading their asses off. It was coming off an unsustainable high, but people are still trading like crazy.
What exactly is all this?
By the way, this is from Zero Hedge.
What exactly is all this options trading doing? What are people trying to accomplish? It's not. You can't tell me it's just buying calls.
It's fun.
It can't be.
It's fun.
But are like people doing sophisticated shit, or are
Some people are.
Or they just like straight up like buying 5 contracts?
I don't know, man. If you're a sophisticated trader, you're not trading options on Robinhood.
Was that just Robinhood, that last chart?
That was Robinhood.
That was Robinhood only.
Yeah.
I'm just like trying to picture like it's just like taking shots on stocks before earnings.
You're saying like just like as if it's not like a ton of fun. Buying weekly options before earnings is so much fun.
Not for me, maybe for some people.
For me, ton of fun. I used to do it all the time.
Right. All right. So that's what's all right. So not just. I shouldn't say it that way. So I guess that's a great business for them. I mean that the only issue I can think of there is if everybody blows up at once. But why would that happen? You have to assume there are people on the other side of all these trades on the same platform.
By the way, probably we should mention that Robinhood was up 24% today. Cool. Closed at 47.
You told Ben to sell it at 34. Do you want to apologize?
I did. I really did.
Did you apologize to Ben?
Did not apologize to Ben. Maybe I should. So we just got an email, actually. This is funny. Just wanted to give a thanks to Target Date Ben for buying the Robinhood IPO. Biggest buy signal I've seen in months. This just paid for my twin girls' Michigan State tuition next year.
So Ben asked, like, he was down on IPO day. It was like 34, 35. He's like, what should I oh no, it was 36. What should I do? Should I get out?
I said bail.
You said bail.
No,
I said hold it.
You were right. I was wrong.
What do I know?
But
Flip a coin.
Hold on. He bought 100. He bought 100 shares. Big deal.
If you would have said this thing's going to shoot up 20% in the next few days, I probably would have said yeah, but from what price? I would have said like maybe from 25.
I did not see this. I did not see this one coming.
All right, congrats. The bag holders win again. What do you know?
There you go.
It's almost like people who are fans of these companies might know what they're talking about and what they're doing, because I have to guess most of the longs in that stock also are Robinhood fans and or users. I doubt there are people who hate Robinhood who are long the stock. So maybe they actually know what they're doing after all. Who knew? Where are we going next on this? Let's do crypto taxes. So if you can't kill crypto, and they couldn't, they had a lot of time to do it, didn't happen, I guess the next best thing is to tax the shit out of it, which is probably, and when I say tax, I also mean regulate. That's probably where the puck is going. I think it's pretty obvious. Maybe that's what's holding back Bitcoin from continuing past 40,000. I don't know. What's your take on the infrastructure bill containing a proposal to take $28 billion in taxes off of Bitcoin holders' hands.
This is not, to me. Is this a story? It's a proposal, and it's $28 billion in new tax revenue in a decade.
Yeah,
it's nothing.
I feel like it's directionally it's not nothing. They are looking at a lot of money sitting in untaxed accounts, not being reported on, that they believe should come into the real economy.
Good luck.
It's not nothing.
Okay, good luck with that. To me, the bigger story in crypto this week was Gary Gensler's. Is that a testimony or his prepared statement? Did you read that?
Yeah, he wants to regulate it like it's a stock or a commodity, and he should, because it is a commodity. He was saying some of the stuff going on in crypto right now merits attention from banking regulators. I agree. And some of it merits attention from commodities and securities regulators. I agree with all three of those.
Here's two quotes. Make no mistake, it doesn't matter whether it's a stock token, a stable value token backed by securities, or any other virtual product that provides synthetic exposure to underlying securities. These products are subject to the securities laws and must work within our securities regime.
Yeah. I mean, look, if there's investment activity in this market, then investment regulators eventually are going to get their arms around it. And they're going to start passing rules, and they're going to start looking at this stuff.
And Gensler, wasn't he the head of the CFTC?
But Gensler is not a crypto foe. Like, he is fascinated by the market. He's given talks about it. Like, he's not like a caveman who's like crypto bad. He's very bright when it comes to this stuff.
He taught a lot of this stuff at MIT, and he mentioned Satoshi. He said what Nakamoto built is very real, but he also said that these platforms not only can implicate the securities law, some platforms also can implicate the commodities law and the banking laws. So there is a long way to go here.
Here's what I would say. If you're one of these people who's in crypto because like you think it's going to overthrow the government, this isn't great news. But if you're one of these people that is constructively trying to invest in this as a technology and as a trader and make some money and see it develop, this should be somewhat welcome news. You knew it was going to come anyway. If it's going to come from anywhere, it's way better that it comes from Gary Gensler than Elizabeth Warren. Like, you want this coming from people who understand it. You don't want this coming from Congress who probably doesn't care about it and they just want to scream at people. Like, this is like almost the best case scenario for the beginning of crypto regulation. Just like the way I would phrase it. What do you think about that?
I agree. I tuned out at the end, but I agree.
You started to lose track. Does Bitcoin? We have a chart of global crypto users.
This is wild.
John, you have this? So Frank Holmes at U.S. Investors said, quote, I believe one of the most attractive early stage investments is crypto. Others have the same idea. The number of people who use cryptocurrency shot past 220 million for the first time. As of the end of June, as many as 221 million people around the world were participating in the crypto ecosystem, which includes trading, investing, doing transactions in Bitcoin and Ether. And what's more, the pace of adoption is quickening. It took only 4 months for the number of crypto users to double from 100 to 200 million versus 9 months to go from 65 million to 100 million. So the question is, are there now too many people in this world in some way, shape, or form for anybody, a politician, a regulator, to just steamroll over them? I feel like we're at that point, right?
I think so. And I think it is so early days for crypto. That's not a commentary on where I think price is going. I have no idea. But in terms of adoption, obviously regulation, use case, I still think that it is in the top of the first inning.
Hold on one second. Warrior Poet, yes, I'm still a fan of the White Lotus, but I missed the last 5 minutes of the last episode. So
wait. No spoilers, but did you see the scene?
No, I missed the last 5 minutes. So when I say
the scene, do you know what you don't know if you know? All
right. No spoilers.
Okay,
no spoilers. I don't know.
Okay.
I'm told I don't want to know. All right. Where's I gonna go? Where's I gonna go next? Oh, you're up next.
Okay. Where are we going? Oh, did you listen to
what's with the twirling the glasses? That's super pretentious. Either put them on or put them down.
Pretentious.
Yeah, almost like you're a professor. Don't twirl the glasses.
These are my screen glasses.
Do you like the Fournier trade? That was basically Reggie Bullock straight up for Fournier. Look, it felt like.
Just cool it with that.
I don't know, man. I'm underwhelmed.
Did you listen to Carl Kawaja with Patrick O'Shaughnessy?
Who?
He works for the Capital Group. It was the best interview with a stock picker I've listened to in a long, long time.
Okay.
Long time. And deep respect for stock pickers like this. It's worth a listen. So one of the things that he said that jumped out to me was it's hard to hold on to stocks for a long period of time. And obviously that's true. I think we still underappreciate how difficult it is. Looking back at a stock, I should have owned it. How did I miss this? You missed it because it's hard. It's really, really hard. And even if you had it early, you probably would have sold. I've never had a 10-bagger. I never will. I can't ride a winner like that. I'm too nervous. But let's look at this chart of Amazon.
Speak for yourself. I don't sell.
Hold on. Chart off.
Chart off. You don't shop. I don't sell.
What do you mean?
By the way, I almost sold MasterCard this week. I'm getting super nervous about all this buy now, pay later stuff.
You should. You should be. Take your profits.
And then I stopped myself. And I said, I don't do shit like that.
Sell now, thank me later.
I'm not going to sell.
Okay. You should.
Right, go on.
All right, go chart on with the Amazon. So 173,000% return since the IPO, and thousands of percent along the way. You didn't have to buy at the IPO to make a ton of money. But let's go to the next chart of the maximum intra-year drawdown. And why am I using this? Because at the beginning of the year, I feel like investors mentally reset. Okay, it's January 1st. The stock's at 300. Went to 320, now goes to 260. Oh, I went from 320 to 260. This hurts. So this is the maximum intra-year drawdown. So the average, even if you invested after the dot-com bubble, so forget the 83% decline, the 73% decline. If you started in 2001, the average intra-year decline is 26%. And chart off. All of those occurred for a very specific reason. And I gave a list of 10 reasons, blog post up later, 10 reasons why stocks can drop. Tell me if I'm missing anything or if you want to pause on any one of them.
Well, can I, before you even go to that, throw chart back on? I love this chart. The point that you're not making here, but I know that's kind of the subtext. Let's say you held this entire time for all of these drawdowns. You have more money in the stock. Like you have more dollars in the stock progressively for each one of these. So in other words, the 24% from 2006, you had a 24% drop in 2016 also, but the 1 in 16 was even harder to sit through because you had so much more money at risk because the stock has gone up. Okay, keep going.
Very important point. So I actually wrote about this in 2017, and I made that exact chart that you just referenced, that the dollar declines get way, way, way bigger over time.
Yeah.
A 73% loss, I mean, that's bad, but a 40% loss on $100, whatever. Anyway, okay. First of all, you got the recession. Everything falls. An earnings miss. The higher the expectations and the miss, the bigger the penalty. Competition. Style. Investors can sour on your industry. They can pigeonhole you into a value, whatever. Macroeconomic factors. If you are a multinational and a lot of your sales are coming from overseas.
Political stuff.
And that too. The dollar strengthens, your sales are going to get hit. And you could hedge it, but barely. Microeconomic forces. I don't know if I'm describing this properly, but just preferences change.
Yeah.
Remember for years, Crocs were very much out of style before they were in again?
Fashion. Black
Swan events. Technology. So IBM, Barnes & Noble, Radio Shack, everything gets killed. All the best winners get killed, and then others, sometimes you have no idea why they fall. But the point is,
did you have Scandal on that list?
No. Missed that.
So that's a huge one, and you're too young to remember this. For the 5 years after WorldCom and Enron, which went down in 2001 and 2002 respectively, in the 5 years after that, every time a company had an accounting irregularity, they would halt the stock. It would open up down 40%, like big companies, because everybody was scared to death of the last war, which was getting caught in a blue chip that turns into a zero. So like scandal is a whole category. Now these days, there's no such thing. Elon Musk like could tell the IRS, go fuck yourself, and the stock would go up probably double. But like that's historically has been a very big reason for people to want to panic out of a stock.
Nikola looks pretty bad, but that's like one of one
That's
right
like
now.
one of 100 where scandal, super bullish. Look, they just beat the scandal.
The stock actually looks terrible, but point taken. So I guess the point that I'm trying to make is it's easy to look at these charts. I should have. I'll get the next one. Check yourself because it's not that easy.
I agree with that. It always looks easier when you look back, and it always looks easier when somebody else was in the stock and you weren't. That's because you don't know what they went through to hold on to that stock. I think that's a really very, very powerful point. All right, where's my guy? Where's Duncan?
Hey guys.
There he is. What's up, kid? All right.
How's it going?
What do you got for us tonight? Viewer topics.
Yeah. So we got a lot of good questions as always, and I just wanted to say, a lot of you know this that have written us before, but I try to respond to pretty much every email that comes in to the Ask the Compound Show email account. So email us. I'll go through all of them.
What's going on
fucking
here?
Apologize.
Well,
No. Let's try that again. Leave and come back. Get out. I want you to come back with confidence. These people love you. Don't you come in here apologizing. All right, ready? All right, let's do viewer topics. Where's Duncan? Oh shit! What's up, Duncan?
Hey guys. So anyway, all I was gonna say is definitely send us an email. Definitely ask us questions.
Hey, Duncan is not from Long Island. I don't know if you guys could.
All I was saying is, and remember, we're sending you 20% off to idolshop.com. And if I've missed you somehow, just let me know. I sometimes overlook emails. And then also the promo.
All
Josh
right, enough for it. I'm gonna throw up.
Okay, yeah. So first up today, we have a question from Harry, who has a short question, but I think a complex one, which is that he would like to hear your thoughts on if we're still in a K-shaped recovery or not. And maybe for our younger audience that might not know, maybe explain briefly what a K-shaped recovery is.
So a K-hole is when you do too much special K in too short of a period of time, and often happens when you mix it with
Josh is coming fresh off the White Lotus.
Yeah, White Lotus, yeah.
They had special K in that.
Okay.
Throwback to the 90s. I didn't know that was still a thing, but okay. Is it still a K-shaped recovery, Michael?
Meaning the recovery has been uneven for people at the top and the bottom. And yes, certainly there's been, oh shit, my computer's about to die. Hold on a sec.
That's good timing. I'll finish this. I'll finish the show alone if that happens.
So the people on the bottom or the wages are rising. So that is an awesome thing. Wages are rising across the board. It's always uneven because people at the top are buying second and third and fifth homes. So yes, but I do think finally, we spoke about this a few weeks ago, labor has the upper hand for the first time in a long time.
So that's got to end.
Yeah.
They got to put a stop to that. I read an article in the New York Post about how people who live in the Hamptons are buying second homes in the Hamptons to get away from it all.
I saw that too.
Okay.
Awesome.
So if you just read that, you would say, yes, this is a K-hole. Or a excuse me. A K-shaped recovery. I'm in a K-hole. This is a K-shaped recovery if you just read that. But you should also read all of these articles about basically labor telling capital, how about this? I'll work 4 hours today, not 8. And I want benefits, and you got to pay me 20% more, or I'm going to go work somewhere else. So both things I feel like are happening on a parallel track. But yes, of course, as always, there's still an acceleration at the rate in which asset holders are getting wealthier. I don't really know that there's any legislation you could pass to stop that, short of literal confiscation of assets.
Legislation.
Well, I'm saying, I don't know what you do about that.
I feel like that would be unpopular.
As a government.
Yeah, probably.
It would be very popular on Twitter and very unpopular in the real world, and it would be a really quick way for your political party to be thrown out of power in the midterm elections. So they're not going to do it. But there will be higher taxes, and probably won't stop much in terms of the K-shaped recovery.
All right, next question.
But,
I got to make burgers. Oh, Josh, my burgers. All right, so you told me to like get the meat into a ball. Do I smush it or do I fist it?
No, never fist, Michael. Never fist. You want to make a ball, but loose.
Elbow? What? Okay.
Don't like roll this thing over like Play-Doh.
Okay.
Like really 1 or 2 rolls in the palm. Put it down on a flat surface. Palm.
Got it. Okay.
Mush it.
Got it.
You want very rough edges around the outside. You don't want a uniformity, and the reason why is the crust will form in those little nooks and crannies around the outside. Okay. And that's
Do you
like
use one of those hammers? Is that what you use that for?
My
don't.
fist.
Yeah, I don't know.
No, your palm. You don't fist it. You palm it.
Excuse me, my palm. Right. Never fist.
Okay. Next question, Duncan.
Okay, so up next, Matthew writes all the way from Israel. I tried my hand at day trading back in March 2020. I was up over
now I'm a
$10,000.
billionaire.
Yeah, I was up over $10,000, and before I knew it, I was down $1,000 all in a day, non-leveraged. And this was their only time trading, they say. So Vinny says, ever since then, every 2 months or so, I get this urge to trade. I see huge gains all around me, people getting rich with meme stocks while confessing they don't know what they're doing. And he says he doesn't have a Charlie Munger to talk him out of trading. And so he fears that the urge is going to become too great. And so he wants your advice on how solo retail investors like himself can stay the course and resist the urge to trade.
I'm your Charlie Munger. Here's what you do. What's this person's name?
Matthew.
Matthew from Israel. Shalom, by the way. Here's what you do. Write down your trades and why you're making them. That's what I did. That's how I didn't delude myself. And then go back and read your own handwriting, and you will laugh and you will be disillusioned of the idea that you could day trade. I understand it's hard to watch idiots make money. I totally get it. Try a few more times. You'll get it out of your system. But write down when you bought, why you bought, and what your plan is. You will not do it for much longer.
And so that's like a trading journal, right?
Yes, keep a trading journal.
I would just say like get a girlfriend and go have fun. Take her dancing. Go out for drinks.
What an old man! What an old man!
Hang out with your boys. Like do something cool, man. There's nothing cool about being tied to a screen, biting your fingernails over like $500 in a stock. It's the wackest thing you could do with your free time. All right, that's all we have for this week. Make sure to check out idon'tshop.com for the latest in financial blogger fashion. Once again, submit a topic.
I just saw your name. Cry now, pay later. It's funny.
Yeah. See? Look what I did. By the way, I just listened to the Square merger announcement on the Quarter app, and I don't even own the stock. I got the chills. They are going to absolutely crush it because they're putting the merchant side and the user side together with a whole menu of financial services now.
With Cash App?
Cash App for the user with buy now, pay later technology from Afterpay, and be able to go to merchants all over the world with that as a unified solution. It's going to be ridiculous.
Good.
I don't even own the
of the
stock, and I'm bullish.
It's enough of the banks.
What else did I say? Make sure you check out Animal Spirits, new podcast episode tomorrow morning. Video soon to follow. We'll see you guys on the Compound and Friends later this week. We had a lot of requests for JC Peretz, who used to do the Untitled Chart Show on this channel. JC is coming back this week, and there'll be video of that too. Okay, we love you guys. See you next Tuesday. Thanks for watching. What are your thoughts?